Alright, welcome to another weekly outlook video where I highlight and show what I'm expecting in the week ahead. In this video, I'll be doing things a little bit differently. I'll be starting off with the dollar index as I do, but the rest of the currencies after that will be basically a requested list of currency pairs that I should go over. And of course, if you want me to cover specific pairs or specific indices or anything at all that you would like me to go over and show what I'm expecting or what I would have expected to happen in those pairs, then of course let me know in the comment section below and I'll be more than happy to go over them. So let's begin with the dollar index. I'll start off with the daily chart. 2 weeks ago I mentioned that I wanted to see price trade below the EQ line before expanding higher, and last we got exactly that. We traded it down into this down close candle as a bullish order block, then price rejected away from it. Last week I wanted to see price trade down into this inversion fair value gap one more time, because inside of this inversion is where we have the mean threshold of this order block. Let's see, body to body. The mean threshold is the halfway point of an order block. That's the halfway point, and that's basically where the inversion gap is. But that's not my main reason. My main reason is on the hourly time frame, where I look for time frame alignment, and I saw this hourly bullish order block right there. This last down close candle that came during a news event is coupled with a bullish fair value gap. I wanted to see if price can come down into this order block with this fair value gap here before trading higher. So going into next week, I'm still looking for the same thing. I'm not yet convinced with these lows that were created here. I would like to see price trade lower, clear the previous week low, which happened on a Tuesday, and then expand higher only from here. So this is my expectations going into next week. Basically what I was expecting last week. If price decides to continue expanding higher from here, I'm willing to let go and see a possible continuation from this daily bullish fair value gap. So we have this fair value gap here. The price may trade down into and continue higher, clearing the 40 days high, and the relative equal high is up there. But for now, I am not touching anything to do with the dollar pairs. So anything to do with the US dollar, either as a main pair, a main currency, or the latter, then I would say the same thing. I want to see the dollar reach that mean threshold before buying it. So if I was trading euro dollar, for example, I'll be even GBPUSD, I'll be waiting for that same level to be tagged on the dollar index for me to consider selling GU. The same level must be tagged on DXY for me to consider selling EU. So I'll basically be basing my trade on the dollar index directly. Of course, we have USDCAD as well. We have USD Swiss, USDJPY, and so on and so forth. I would like to see the dollar trade down into that area, that level that I pointed out, before considering higher prices. That's my main view on the dollar index or anything to do with the dollar. Now let's begin with the list that I have here on my phone. Well, we have let's see here that we have the yen pairs, the yen crosses. So I'm gonna start with AUDJPY. AUDJPY actually had a setup from 2 weeks ago that I also publicly announced in the Telegram channel, where I share my daily trades and or weekly trades or monthly trades on how I make my ends meet. I was looking for an internal to external range move from this weekly BC to the external range liquidity, which was at the highs up there. So we got an SMT inside of this PD array, inside of this fair value gap, with obviously NZDJPY. We got a market structure shift on a 4-hour time frame. After tapping into that PD array, we tapped into it here, price displays higher, I measured the range from the low that was made to the high, and I was looking for a discounted fair value gap. We got this discounted fair value gap down there under the 50%, right? Discount fair value gap with an order block. Price came down and tapped it, displaced higher, gave us the structure shift there when we closed above a swing high. We closed above that swing high with a fair value gap. So price traded down into it, stop loss at the previous swing low, aiming for the external range liquidity, and we cut this complete 3.5 hour trade on AJ. So that's my view on AJ. We have already taken out the buy side, so I'm neutral right now. I'm not going to really worry too much about what's going to happen, but I still think we're going to climb higher. The reason I am bullish on any yen crosses is when we look at the yen as a currency. This is basically the yen basket. As you can see up there, it's the yen, yen's strength relative to all other pairs, and we can see on the weekly chart we traded this internal to external range move, and when we check on an even higher time frame like the monthly or 3 months chart, we can see that we are literally at the all-time lows right now. We are literally at the all-time lows right now on the yen, and I believe when you are at the all-time lows, there's no need to keep fighting the trend until or unless the trend shows you a very clear change in the state of delivery to the opposite direction. So right now I still see us being bearish, and I still think price will remain bearish for a while. Even if we do turn bullish, there's this quarterly fair value gap that we could respect and continue lower. But yeah, in a bearish trend, no need to fight it. When we look at the yen in the yen futures, which I don't like looking at because it's basically USDJPY inversed. I don't really like looking at yen futures just because of the fact that it's literally just the inverted yen chart most of the time. Of course, let's clear this. We don't need that anymore. We can see that we're also bearish here. So yeah, I'm bearish on the yen, so anything against the yen I'm going to be looking for buys. So AJ buys, CJ I'm looking for buys as well. CJ didn't give me an entry, so I didn't bother with it in the last 2 weeks, but we can clearly see that price is going for this buy side liquidity. If this weekly, if we had a weekly close here that wasn't going to be dramatic, if we had a weekly consolidation or something that looks like this, it would have been nice, because we would have a an order block with a fair value gap here. This would have been a nice entry to take it, and I would have taken it from internal range liquidity to external range liquidity, but we don't have that right now. So I would say just watch this order block, watch the weekly order block, because we do have CPI news in the week, and we do have a possibility of price coming down to the order block, tap it like so, and go for the external range move. But I would have preferred this if it came with a fair value gap. We don't have that though, so yeah, just watch out for that. We could possibly get a retest and continuation during the CPI in the week, unless we clear the highs. If we do clear the highs, then there's no need to pay attention to it anymore. Let's delete these. Moving on to the next yen pair or yen cross, EJ. EJ was actually the second trade that I announced on my Making Ends Meet series with the same idea as AJ. So if you are watching or following the playlist, you would know that I gave the entry for this last week because of the same idea, obviously, as I just mentioned. Now we have a weekly PD array here, a weekly BC, so we have a possibility of price going from internal range liquidity to external range liquidity, something like that, right? But now the second thing that we need is an SMT inside of this PD array. When I went to the correlated pair, which is GJ, I noticed that we do have an SMT. Let's pay attention to the lows here. This is the same fair value gap, by the way. Let's make sure of that. This fair value gap was created on the 13th of May on GJ. This fair value gap here is made on the 13th of May. Now let's pay attention to the lows of each candle, because that's important liquidity levels for me. This low on the 3rd of June was swept on the 10th of June. So we got 27th, 3rd, then 10th. On GJ, we got 27th, 10th, 3rd, then 10th. And we can already clearly see that we failed to make a new low on GJ, right? The same way that EJ did. So this is an SMT divergence inside of a PD array. So we label it as that, SMT inside of a high time frame PD array. We tapped into the same PD array, it's the same fair value gap, but GJ failed to take this previous weekly low, while EJ successfully did that. We cleared the low there of this previous week, like that. So now that we got our SMT inside of a PD array, what do we need? Time frame alignment. We went down to the 4-hour chart to find our entry. This was the low that was swept, so let's make that clear where our SMT is. It's over there, SMT divergence. What's the next thing we look for? A market structure shift with a basically a fair value gap after a market structure shift has been confirmed. So we got this swing high there. We closed above that swing high, confirming a shift in structure, or some other people might call it a market structure break. So for me, when we got this and we created a second fair value gap there, I announced that I'm looking for buys from that exact fair value gap, this one right here. The second fair value gap gave me the confidence to enter this trade. So I put my limits there, my stop loss at the previous swing low over there, and the target at the high, which is the weekly buy side liquidity all the way up there. So it's a nice 2.2 risk to reward trade. So yeah, going into next week, I'm looking for a continuation higher on this same time frame. On the 4-hour chart, we created now yet another fair value gap there with a an order block with a fair value gap there. I mixed that up. So I'm looking for a continuation from this area to the buy side liquidity. After we've already taken out liquidity there, I don't expect us to continue taking new ones. Of course, nothing stops price from doing exactly that, but I'm expecting us to continue higher from this box. That's EJ. I already went through EJ, so I don't have to go through GJ again. I'm basically looking for the same thing, but as you saw, GJ has already cleared its buy side liquidity levels. It's already reached its high time frame objectives, and I would say probably just stay out of this chart. Don't bother with it. It's not at the all-time high, I don't believe. Let's see if it is. Yeah, it's not at the all-time high. We still have higher prices there, but as for current price, I would say maybe don't touch GJ for now, because these objectives are possible but far. Like, this is so many 100 pips to go. So yeah, you can choose obviously using relative strength to buy GJ. That's completely up to you, because obviously GJ is stronger than EJ right now. So you could take this, but I don't really like taking it when I have such a far objective there. I'm not really a swing trader or a position trader, so I'm not going to be the one to hold it all the way there. And yeah, NJ, because I've already gone through AJ, I don't think there's a need for me to go through NJ again. NJ is stronger. NJ has already reached its objective all the way there, so I wouldn't bother myself touching this NZDJPY. So yeah, those are the yen crosses. When we go back to USDJPY, it's a bit of a funny situation, just because of the fact that I said that I wouldn't touch it. I wouldn't touch the dollar until or unless we get to that hourly order block, right? But looking at the strength that UJ is gaining right now, USDJPY is gaining right now, and the clear bullish intention on this chart, we could see a possibility that price returns down to this fair value gap and perform some sort of internal to external range move. But with the way we're so close to the buy side liquidity, I don't think we might retrace here. We could, price really could retrace here, especially if the dollar falls off. So we might get this to the external range liquidity, or we might sweep this high create a swing high there, and still come back down to this gap to take out the new high that's being made. So yeah, at this point, keep in mind that we are at the all-time high on UJ, so I am very careful with anything to do with dollar yen at these levels. So yeah, I don't as you probably noticed by now, when prices reach the final objective or the higher time frame objective, I try to stay sidelined until we get clear directions. So yeah, that's all for the yen crosses. Let's see what's next on the list. The next pair that I have on the list is a bit of a funny one, because it's basically a relative strength indicator, which is AUDNZD. On AUDNZD, let's start off with the monthly time frame. On the monthly, we can see price is currently rejecting from this order block right there. We got this bullish order block coupled with a fair value gap. Price literally just tapped the body and left, so we could expect some sort of internal range liquidity here to external range liquidity, aiming for that swing high there as buy side liquidity. So obviously, if we're dealing with a monthly time frame, we need a daily confirmation. On the daily chart, we already got a market structure shift when price closed above this swing high right there. It confirmed this shift in structure, and we are now respecting bullish PDRAs. So we are respecting this BC at the bottom there. We are disrespecting this CB. We disrespected one CB there. We disrespected another CB there. And we have now disrespected this bearish order block over there. So we've disrespected multiple bearish PDRAs while respecting bullish PDRAs in the process. So this is giving us the bullish intention that yeah, on AUDNZD, which if you are not comfortable trading this, which myself I'm not, if you're not comfortable trading AUDNZD, you can use it as a relative strength to know which one is stronger and which one is weaker between AUD and New Zealand dollar. In this case, we are bullish on New Zealand dollar. I would like to see a possible continuation from this now mitigation block, this previous up close candle that was supposed to support lower prices. I would like to see price continue higher from here, anywhere within this area. So this would give us an indication to know which one to take between AUD with all these pairs or NZD with all these currencies. I mean, not pairs. So yeah, if you're looking for buys, I would rather say buy anything with AUD on it. If you're looking for sells, look for sells on anything with NZD on it. So yeah, it's just a relative strength indicator. So I'm bullish on AUDNZD until that buy side liquidity level up there. The next one we have on the list is the indices. Well, the two major indices, which is the NASDAQ and S&P 500. Let's actually bring it up. On the NASDAQ and S&P, we know that we're currently at the all-time highs. Actually, let me pull up the continuous contract, starting with the S&P 500. Weekly chart, we can see that price is bullish. Monthly chart, the same thing. We have already traded using this monthly internal range move to external, which we've seen for some time already, or something like this. So now we've reached the objective, and it's a bit of a funny situation where I wouldn't know exactly what to do. Like now we're at the all-time high. I would just say keep buying until the buyers fail. So right now we are currently still bullish. We're still respecting bullish prices. We have now created a new weekly fair value gap, giving us more bullish intention. So I believe we could get another internal to external range move from this gap to the buy side liquidity level up there. So I expect to see a low form next week inside of this fair value gap, then a continuation to the buy side liquidity level up there. It would be nice to see an SMT divergence within that same gap. So say a situation where E-mini S&P 500 takes out this sell side liquidity while the NASDAQ doesn't, for example, something like that. I'm not saying exactly this, but we need to see some sort of SMT inside of this high time frame PDRA for us to consider taking this, at least for me to consider taking the buys from this fair value gap from the weekly perspective. I will not be paying too much attention to the daily gap. In this case, I'll be paying more attention to the weekly than the daily. So let's move on to the NASDAQ there. Okay, there's no need for this, can delete it. Weekly time frame, the exact same thing. We're respecting bullish price action so far. We bounced from this gap there, and now we've created a new fair value gap there. So I'm expecting price to retrace down into this and create an SMT for us to take this higher to the buy side liquidity. Go down to the daily, we do see a discounted fair value gap in there. So price could retrace down into this discounted gap and continue higher. Let's arrange this a bit. So we could see price trade down into this discount fair value gap with some sort of SMT here, then take it higher to the buy side liquidity up there, the all-time high basically. So yeah, that's the next, those are the next two on my list, and that's what I'm expecting next week. I do also have oil as part of the items on my list. On oil right now, I'm currently bullish. Well, just looking at the daily time frame, but let's start off with the weekly. On the week, actually even monthly could work. On the monthly time frame and chart, we have disrespected this CB that was supposed to hold for lower prices. We traded down back into it and bounced from this bullish order block right there. So we have two indications or two indicators that price may remain bullish from here. Yes, we didn't properly respect this monthly gap, but this rejection away from this order block makes me think that this buy side liquidity is next. When we go down to the weekly time frame, we can see that we have swept internal liquidity levels. Let's make that more accurate. We swept these relative equal lows. It's clearer on a 4-hour chart or lower time frames, but yeah, we swept these liquidity levels, tapping into a high time frame PD array. On the weekly, we've now currently created a fair value gap as well, so price may trade down into this gap before pushing up, but I don't think, personally, I don't think we might actually trade that low. Going down to the daily time frame, the reason I'm thinking that we may not even trade that low is because on the daily, we created a BC here, we also created a BC here, but these can be taken as breakaway gaps just because the previous candles kept closing solid bullish candle above it. Don't know how to explain it, but looking at this candle, we closed above it properly. Doing the same to the next few candles, we see that we continue suspending higher prices, and price doesn't even show intention to come into this fair value gap now. Let's draw it out. Price doesn't show the intention to come into this. Keep in mind that this is a daily time frame, by the way. So if price is reluctant on trading down into this discounted gap while creating new fair value gaps, especially one that broke a swing high, I think and I believe that price is more likely to trade down into this daily gap instead of the discounted ones down there, which we can remove now. Instead of trading down into those discounted ones, I believe price is more likely to trade down into here to that external range liquidity level, and ultimately the one from the monthly time frame at that buy side liquidity there. So I will actually set my alert at this area in hopes of getting some sort of SMT divergence for me to take it higher. But even if we don't get an SMT, I might just take it blindly. But I'm also bullish on oil, looking for this possible market maker buy model. Let's split it into quarters. Yeah, we can see this fair value gap literally perfectly aligns with the 50% area. So I'm looking to see if price can come down into this, then continue higher. That's my bias on oil. If you're wondering what I use for SMT divergence on crude oil, I just basically look at US oil and UK oil for SMT. Just pay attention to them. They move relatively one-to-one, but when there's a crack in the correlation, that's probably an indication to take price higher or lower. So yeah, that's what I pay attention to. Anyway, let's move on to the next one. All right, so the next ones we have is the Swiss crosses. We have USD Swiss, CAD Swiss, and AUD Swiss. Those are the specific ones that I have here on the list. So let's start with AUD Swiss. AUD Swiss on a monthly time frame, we have 5 days for this monthly candle to close. 5 days and 10 hours to be more specific. But so far already we are looking to be respecting this bullish fair value gap. Yes, we traded lower, but we only traded lower into this rejection block right there. We traded lower into that rejection block, and we are still within this fair value gap. So yes, I would typically say wait for the 5 days to actually confirm that this candle is closing inside of the fair value gap. But with the rejection we've gotten so far, especially from the Swiss, and remember when we were covering AUDNZD, we mentioned how we are bullish on AUDNZD. So AUD Swiss will be a much better pair to be looking for buys as opposed to NZD Swiss, which is, I believe, why they wanted specifically AUD Swiss, right? So AUD Swiss, looking for this possible internal to external on the monthly time frame from that fair value gap to this buy side liquidity for as long as AUD remains bullish. We also have AUDCPY next week, so pay attention to that for possible buying opportunities. I am not going to jump to the daily time frame. I just want to break it down from the weekly, then work down. On the weekly, we do see price sweep the previous weekly low. Let's actually compare this to NZD Swiss while we go down. Okay, NZD Swiss did the same. Clear this up. Okay, yeah. Right now we rejected from around the mean threshold of this other block. Not even the mean threshold yet, just the 25%. So the quarter of the quarter, half of the half, I mean, making a quarter. So we rejected from the 25%. The next drawn liquidity, if you are looking for something more short term and not willing to swing it all the way up there, would be this fair value gap here in the premium side of the range. Keep in mind this is a weekly fair value gap, so that's a reasonable target. Going down now finally to a daily time frame, which is our proper time frame alignment, we can see the clear liquidity sweep, right? We can see a sweep there in liquidity at the lows. We of course have a previous daily lows being swept there, 3 drives pattern before we finally started pushing higher. Sweep, 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 and then push higher from what? This fair value gap there. Just like that. So we got a shift in structure. Well, not really. We got a shift in structure on an hourly time frame when we tapped into this daily gap. So you could have cut the lows somewhere there, but since we didn't get that, right now I like the fact that we're already disrespecting this CB, this bearish fair value gap, by closing above it. We even came back and retested it. So I am now looking to see if price can trade into this, then continue higher during CPI. So I'm looking for something like this. But if you're not willing to enter this risky buy, because to me I would consider this risky because it's not yet confirmed. Remember, this is a monthly PDRA. Our confirmation should happen on a daily, right? So ideally we would like to see a closure above this daily swing high. We would like to see price trade maybe to this fair value gap, maybe not, but price to trade and close above this swing high. When that happens, especially if that happens with a fair value gap, that would be nice because we have this bullish order block right there. I mean breaker, not order block, breaker. Remember, it's a high, a low, a new high, and then we retest and continue higher. So now we would have a breaker coupled with a fair value gap at that point. That's a high probability breaker to me, so I'd look for a retracement back into that breaker to continue higher. So yeah, that's if you want to wait for a proper confirmation on the daily. You probably have to wait for the entire week to play out, or yeah, maybe not, we'll see. If price comes down into this fair value gap, I am willing to look for an entry from a lower time frame. If it doesn't, I'll wait for this candle to get violated, these two candles to get violated, then I'll look for a retest to continue higher. So that's my view on AUD Swiss. The next one is CAD Swiss, and CAD Swiss, basically the same structure. Well, not really, but basically the same idea. When we start off with the monthly time frame, we can see that earlier on, personally, I measured this range when we closed on this month there in April. I measured the range and I saw that the only discounted fair value gap we have was this one. I just didn't think price was actually going to trade there, but yeah, of course, price traded there, and we actually traded into this bullish order block as well, the last down close candle before with the expansion higher. So these are two proper premium PDRAs, right, for price to bounce off from. Deleting these for now. Maybe we should actually keep the order block. Yeah, let's keep the order block as our discount PDRA. We can obviously gauge some sort of internal range liquidity from the gap to external at the swing high. This is a monthly time frame, so this is likely going to be a swing idea. It could even turn into a position trade idea if you hold it all the way to that premium fair value gap, because when you measure the range, the entire range from the high up there to this low, you can see the premium is right there, the 50%. So it could be a position trade idea, not just to the swing high, but all the way there. Which is why I got it flagged as my main one, my main top watch for next week, CAD Swiss. We also have CADCHF next week, so something to really watch for. Monthly PDRA, daily confirmation. On the daily time frame, we haven't closed above any previous swing high, but we've closed above a series of previous down close candles. So for me, this has now automatically become a bullish order block. Let's actually make this a little bit thicker. This has become a bullish order block. So if price can somehow trade down into this fair value gap with this order block there, I'm probably gonna take this trade without waiting for extra confirmations or anything. Let's actually set 2 alerts. I want to have one at the gap, then I want to have another one when we start encroaching the body of the order block, and then a final one when we tap the body of the order block. I'm willing to take this trade and take it to that buy side liquidity and possibly swing it to that level at 0.70531. So that's my trade idea on CAD Swiss. The last one is USD Swiss. Another tricky one, because my bullish my bias on dollar is bullish, yes, but remember I said I wanted to see us tap into this inversion gap, or I wouldn't really touch it. So that's why this is not on my top watch, even though yes, it's literally the same structure as what we just covered now from the other two. And yes, I am looking for bearish continuation. Let's remove the drawings from the previous months from using the same idea, the exact same idea, but we don't have this did not trade down to a discount, so I'm not really going to watch this as my top watch. But we did trade down into actually we even traded down into this monthly inverted fair value gap there. It wasn't a discounted PDRA, but it's a PDRA either way. And on the weekly, we traded down into the order block perfectly. So this is enough for me to say there's no need for us to trade down into discounts. We traded down into the order block, we rejected aggressively away from it. We literally made the whole weekly candle that was supposed to be bearish to become immediately bullish. So I'm looking for that swing high to be next now. But again, it's dollar, and I wouldn't personally touch it, but I'm looking for higher prices on this, on USD Swiss, with the same entry as we just covered now on CAD Swiss, with a bullish order block there. But this is likely going to be a breakaway gap, by the way. If it's a breakaway gap, that's also fine, because we will still wait for a market structure shift for a proper entry to the buy side liquidity up there. So yeah, either way, if this is a breakaway gap because of the BPR and because of the fact that we closed above the previous candle high there, this could be a breakaway gap, which if it is, as I said, I'm willing to watch it to close above a previous swing high, market structure shift, possibly with an order block or breaker, then I'll take it higher. So that's my bias on USD Swiss. Let's see what else they have on the list. All right, so they are beginning already with another cross, the second cross pair that I the strength indicator that I don't really like looking at to trade, but I look at it for strength indication. We start off with the monthly time frame. Well, so far I can already tell that we are bearish. We are likely going to trade this sell side liquidity there. Going through that, we have that sell side liquidity down there. If we remain bearish, right, we have rejected already from the monthly order block. Going down to the weekly time frame, we can see that order block was a BPR as well over there. So price is already showing me bearish signatures. On its way down, we actually now created a new weekly fair value gap. So a weekly fair value gap that was actually created by breaking a swing low right there. So for me, if you ask me, I'll be looking for a possible internal range liquidity to external range liquidity, like I do with all my pairs. Let's make that arrow proper. So I'll be looking for that move there to there. Of course, you can always look for lower time frame confirmation and all that jazz, but it's not needed in this case, just simply because of the fact that I just use this as a strength indicator. I'm not looking to refine it further than that. I'm looking for an internal to external range move. So in other words, I would likely sell anything to do with the euro and buy anything to do with the pound, because technically speaking from the charts, euro is currently weaker than the pound, right? So if I am looking for an SMT to sell any pair, I'll be looking at the euros mix than the pounds mix. So if with that being said, let's start off with the euro dollar being the majors. Of course, I've already highlighted how I am still bearish on euro dollar because I'm bullish on DXY, but I also said that I'm looking for DXY to tap into that hourly order block for me to continue selling it. But we can already see from the charts right now that we do have a possible market maker sell model. We got SMTs at the highs. We got SMT last week when euro took Friday's high and GBP didn't, you know, so we've got SMT there as well. So we got a few things confluencing for sells, right, to the 40 days low down there, or the sell side liquidity down there, completing the market maker sell model. We also have a daily gap over there. I know it's tiny, but we have this daily gap colliding with the 20 days low and the 60 days low. Remember how I told you that old IPDA data levels are actually critical, even though they've been cleaned out or purged. So we could see a move from internal range liquidity to external range liquidity, clearing that sell side and possibly the 40 days low. Of course, price could also trade higher, but either way, just watch out for this gap to continue lower. So I'm looking for lower prices on euro dollar. The next and last two pairs that I actually have on the list here is EURCAD and EURAUD. I've already mentioned how I'm overall bearish on euro pairs, right? So most of them are going to look the same. EURAUD and EURCAD, the last ones. So let's start off with the monthly charts, monthly time frame. We've had consecutive 4 months of the year. Basically from March, we've just been continuously bearish until now. We've taken out the previous daily low, monthly low. I'm saying daily. We have that sell side liquidity next, and it's trading back into this inefficiency, which pushed price higher in the first place. So we might see price take this sell side, more likely to take this sell side liquidity, and watch out for this other block. So yeah, those are my two main areas that price are likely going to draw to. When we check on the weekly time frame, we see that price is currently rejecting from this order block there on the weekly chart. We also were rejecting from this order block over here before that. So we came off from this order block, actually got an entry there, got a re-entry there, and then got another entry last week here. So very bearish signatures. Yes, we are currently in this BPR, the inverted gap, which is going to act as a hurdle in price, but I'm looking for a possible continuation in this bearish trend. So going down to the daily, let's see if we see anything on the daily time frame. We have two fair value gaps. My eyes are more interested in this one, to be honest, but this is purely because it's a fair value gap that took a swing low, and it's a fair value gap that has an order block that took liquidity. We took the previous daily high there at that point. On a lower time frame, it's more clear. We took the previous daily high, so this is a high probability order block for me. I am more interested in this one than that one. I would actually say I'm more interested in the order block than the gap itself, but let's set alerts at both of them. I say we have two gaps because if you look lower, we actually have this fair value gap there. So we could get some sort of internal range to external range liquidity move, something that looks like that. But personally, it's not on my top watch for the week. I've already mentioned that my top watch is CADJPY. So yeah, we could get something like this, but I'm looking for something that looks more like this personally, and I'm willing to leave it to run without me. And yeah, keep in mind that we have AUD's CPI next week, along with CADCHF next week. So that leads us to the next one and the last one, which is EURCAD. Clearing this old one, starting from the weekly and monthly, we see the exact same thing forming. This month we have 5 days left to go, and if this candle closes lower, this becomes a high probability order block because we took a previous monthly high. So if we close low below this is probably going to be a continuation to the swing lows that we have there, and there. So just watch out for this order block in the next coming months. On the weekly time frame, we can see the clear sweeping liquidity up there, tapping into that rejection block over there. It's probably an order block on a lower time frame, but I'm just too lazy to try and go on a lower time frame. So we tapped into that area, rejected lower, and now created a weekly fair value gap. I don't think I would be too interested on the daily, but looking at the way we have expanded aggressively with this long wick on at the highs, I think we might not even trade into that gap, into this small gap up there. Let's actually check on the daily. Yeah, I was right. I don't think we're going to trade up into this. I think price is just going to continue from this area where we have basically a breaker. It's a break on a lower time frame because we swept liquidity here. We swept liquidity, we displaced, and now we have created a fair value gap. This might actually go on my top watch for the week. Yeah, EURCAD might actually go on my, second focus pair for the week ahead. Internal to external, but the thing is, I would only take it if we get to this breaker. If we get to the breaker, I'm going to take it. If not, I'm not going to bother myself with the fair value gap. I'm going to try the breaker, but not the fair value gap. So yeah, that's my expectations for next week. Again, another internal to external range move. But yeah, that's all I have. If you have any requests, of course, as I mentioned at the beginning of the video, you can leave your request down in the comment section below, and I will get to them as soon as I can. For now, I would say stay safe, good luck, and good trading.